seat in here, just scoot across. It's up to you. Hey, we are live. We are live. Oh, welcome everybody.
Everybody.
Tell them who we are, Sam.
We are, I am Sam Shukavage, and this is my father, David Shukavage, and we are, and with us as always behind the scenes is Amy, our director of client fun. I am Sam Shukavage, and I can hear us. And we are Carolina Retirement Planners. And you are with us here for our weekly happy half hour. We come to you live every 4:30, every Thursday at 4:30 on Facebook.
And this is number 54. We started
Wait, 55?
55. And sorry, I had a little, yeah, you guys went, you normally don't introduce me that quickly. I'm like, whoa, too much technical stuff happening. Sorry, I didn't mean to like have feedback for you guys there. My bad.
I'm so sorry. I'm sitting out here and it's always like right as you're doing something, my little dog inside just started like barking like crazy right as we started. And so I lost my train of thought and
if most of the regulars, and boy, we got a lot of regulars, know to say hi in the chat. We don't know you're here unless you say hi in the chat and tell us what you're drinking, say hi. It's just good to see folks come. In a little bit, we're going to talk about bonds and some of the things to think about in bonds and interest rates. But first, we're going to have some fun, talk about some other things. Let's start with what's everybody drinking today? Sam, what are you drinking?
Ooh, I'm drinking something fun today. I am drinking, this is a passion fruit blonde that a recipe that my husband created that they're selling at Waterline Brewery. So for those of you who don't know, my husband is a brewer down at Waterline, and he's awesome. They make great beers there, and they've been letting him try his hand at making a few of the recipes. And so if you go down there and feel like something very light, refreshing.
You want a light, refreshing blonde, you can go down there and get a glass of his,
Yeah, it's, he was telling me, I was like asking him about it before we got on the call. He said it's made with, what's one of the interesting things, it's made with a new hop, a new variety of hops. It's a domestic USA hops called the Medusa hops, which I think is an interesting name.
Yeah, a blonde made out of Medusa hops. It's gonna.
Don't look that hops in the face. Don't do it.
I know.
That's right.
Especially, a striking fruity blonde.
Yeah, it's just and Amy, what are you drinking today?
Oh, I'm drinking an ultra infusion. I'm going light. Normally I'm doing water, but I figure, it's a day for a beer, so I'm doing it.
Decided to have. And as usual, I am drinking, although it does not look like it, this is herbal tea. I learned that if I drink alcoholic things early and things can go astray. Plus I have someone to meet with afterwards. So it's herbal tea for me once again today. And one of the, I also want to introduce the newest member of our.
I see that Bruce is drinking a Highland Brewing IPA, and that Phil and Carol are drinking some iced tea.
Okay, and we also,
while we're on the topic of what we're drinking, sorry.
Let's run down. We also see that looks like Miranda is here, one of our top fans, and Bruce, long time no see. Cindy is here. Al is here.
Hey, Bill.
Bill once again. Barbara.
And Donna. Hey, Donna.
Phil.
And Carol.
And James, who says hi. Bruce, and Lynn is here. And our top fan, Teresa, Amy's mother.
Actually, hey, how do you say the second name in your name, Teresa? Or Amy would know how to say this.
Maciejewski.
Yeah,
we're Polish.
Yeah, another pierogi eater, just from way back. Donna, Ellen, Heidi, and Al says, Al says, you must love your jobs. Where else can you drink on the job? So I want to introduce someone else who joined us recently, our family here. This is Kristin Owen. She has joined us, and she is our director of first impressions. So we are now seeing people in the office again. And when you come in, this is the welcoming face that you will see when you come in the office. So say hello to Kristin, everybody. And I know we introduced her last week, but I thought some folks may not have made it, so we would say hi again. One other thing I want to mention right now is that we are going to have classes again. We've taught a couple tax classes at UNCW, and this Saturday starts at 9, goes to 1. We're going to, and next Tuesday evening starts at 6, goes to about 9:30 to 10, depending how long people laugh at my jokes. We're going to teach our full retirement class. Actually, we're squeezing it down a little. It's usually about 5.5 hours, but we're kind of doing the summer condensed version. And Amy will post something in the chat where you can get in touch with us. But if you haven't taken the class, it's a lot of fun. It is not a boring class. If you found these chalks on the board interesting, you will love the class. And if you have taken it, be sure to tell your friends that they should come and register and let us know. So again, it's the first time we've done it since last March, and I'm looking forward to it. I hope I remember all the stuff I used to know, you know. So but it's just going to be good. It's going to be good.
We'll both see you there.
Yes, she would.
Oh my gosh, that's what I was just going to say. I was like, if for no other reason, sign up to go on Saturday so that you can meet Kristin, because she's going to be checking everybody in. So, I mean, and she's so wonderful. Everybody's going to love her. I mean, I love her. So if I love her, you're all going to love her.
And well, let's see, one of the things we also always cover is what day it is. Mm-hmm. And Amy, what day is today?
Okay. So I know you guys are putting me on the spot because it's a little tricky to say, but I just want to know if anybody is from the New England area, because today is apparently Penucci Fudge Day. And I know nothing about Penucci Fudge, and hopefully
did you look and see what was in what makes Penucci Fudge?
If you are from New England or you know what Venucci Fudge is, tell us on this chat. We'd like to know.
Apparently it's like caramel, and I think it's brown sugar, but maybe I'm wrong. But if anybody knows, let me know. There's some other fun days like Bubblegum Day and some other things, and I'll let you know.
Yeah, it's also Hammock Day, something all of us in the South can understand. You know?
I love a good hammock.
And whether you like them or not, everybody probably at least knows bubblegum. So, but we've got to talk.
I'm the only one who doesn't like bubblegum. I'm like the only person I've met who detests bubblegum.
Yeah, okay. I don't even know how that's possible. I love bubblegum. I mean,
no,
what? That is so crazy to me.
I don't like anything about it.
Well, at least let's get down to a little education. We're going to talk about bonds today. And one of the things is most portfolios are a mixture of stocks and bonds, and we know how the stock market goes up and down like mad, but it's less clear about the bond market. Are there risks in bonds? How do bonds go up and down? And indeed they do. And we're gonna go to the board now and do just a little bit of education on that. Make it kind of an interesting description. Let me see if I can switch cameras here. Okay, we've got a different camera set up. And if all goes well, yes, everybody can see me now, right? So
yes, we can see you, Dad.
Now, you've often heard it said that, when interest rates rise, bonds fall. And they usually use like a seesaw. They say it's like a seesaw. When interest rates go up, bonds fall. When interest rates go down, bonds go up. And that's okay, but I like to know a little more of the why. I think people like to understand it at a little deeper level than it's a seesaw, you know? So this is sort of our little explanation on how interest rates affect bonds. Now, you remember a bond is when you're a lender. You lend money to a company and they pay you interest, and then eventually they pay your money back. And we are going to use an example of a real life fictitious example, a lady named Pauline. And Pauline's one of those people that seems to face a lot of perils. And if you remember anything about the perils of Pauline and seeing it on TV when you were a wee one, type in the chat, let me know. I'm wondering if I'm the only one. If you don't know what it is, Google it, but it's another one of those histories. But Pauline goes out and she buys a bond. Now she buys a bond for $100. We're going to keep it simple, easy math. She buys a bond for $100, and that bond pays her 3%, 3% a year. Sam, how much money will she collect every year if she's got a 3% bond?
$3.
$3. See, I don't ask tough questions here on Happy Half Hour. And this
Hear that
bond,
confidence that I had.
yeah. You did answer that confidently. This bond is a 30-year bond, which means that it will pay her $3 a year for 30 years. And at the end of 30 years, it's going to give her $100 back. Okay. And that's just kind of how bonds generally work. There's a period of time. And now, let's say that 3 years go by. Okay. 3 years go by. So there's 27 years left on this bond. And you know, in those 3 years, interest rates on a bond like this have gone from 3 to 6%. So I can go buy a new bond like this, and instead of getting 3%, I can get 6%. And you know, with interest rates as low as they are now, it wasn't that long ago that they had been twice of what they were now. So it could go back up in a few years. Now, Pauline, with all her tendency to get into various perils, gets into trouble and she needs this money back. She can't wait 27 more years. She needs the money now. She comes to me and she says, David, I got this $100 bond paying 3%. Will you give me $100 for it? Will you buy it off me? Now, am I going to do that?
No.
And why is it, Sam, I would not want to give her $100 for that bond?
Because you could go with $100 and buy a 6% bond.
Yeah, I could go and put that $100 and get $6 a year, right?
Yeah.
So why would I give her $100 for this old bond paying only $3? But Pauline, she needs the money. You know, she's in peril. She's, gosh, Dave, I need the money. What can you do? And I said, I'll tell you what, Pauline, I will give you $50 for this bond. Now, if I own the bond, how much money is that company going to pay me every year?
Oh.
That's a question, Sam.
Gosh, I'm so sorry. $3.
Yeah, they're still gonna pay me $3. Whoever owns that bond gets $3 a year. Now, $3 is what percent of $50? What's
3%.
6%?
6%.
Yeah. So because interest rates doubled, I have to cut the price of the bond in half to get the same amount. And this is the reason why, you know, they got the seesaw, bond interest rates up, bonds down, and so forth. This is the real reason, because you're now competing with new bonds at that same interest rate. At the same time, if interest rates had fallen, then I'd have to give her more than $100 for this bond. Now, here is the thing. I would probably have to give her a little more than $50 for this bond. And here is why. And I don't know, I didn't calculate exactly how much, but I might have to give her $60 for this bond. And that's because, remember, I paid $50 for this bond. In 27 years, the company that I lent the money to, that the bond belongs to, will be giving me $100 back. So I'm going to get an extra $50 back, but it's going to be 27 years in the future. And you know, there's all this time value of money calculations that enter in. And it's kind of funny because, you know, those of you who've been around or know us, I actually have a degree in engineering, and I worked for 25 years in engineering, management, consulting, quality, a bunch of stuff. So, you know, numbers are good. And when I switched careers 20 years ago this year, I had to go take all these tests to learn all the financial stuff, learn it. And you know, most of it is not that hard. You're an engineer, calculus, thermodynamics. The hardest thing in all the coursework was understanding bond calculations and bond values.
Yeah.
You took the test more recently, Sam, right?
Yeah, I mean, it's getting further and further away all the time, but yes, it was definitely a lot to wrap your head around.
I remember Sam complaining about or commenting that this was the hardest part of all the material, you know. So bond. Now, here's another basic principle. If this $100 bond only had 1 year to go, right? And I knew that in 1 year I would get my $100 back, it wouldn't go down as much. So a general rule is long-term bonds that are way out there, they go down faster or more when interest rates go up than short-term bonds. A bond with a shorter term isn't as effective. So there's kind of a principle. If you think interest rates are going to rise, you kind of want to move more to short-term bonds. They may not pay the same amount, but they'll be less susceptible to interest rates. Now, let's go to kind of real numbers. There is an organization called FINRA. It stands for Financial Industry Regulatory Association. They kind of regulate stockbrokers in the industry. And they put out a document a while back where they kind of give some numbers. And bonds are rated on a thing called duration. They take into account the quality of the company, how much longer the bond has to go, what the percentage is, and they come up with what's called a duration. And they gave an example that if you had a bond with a duration of 8.4, which is about equivalent to a 10-year bond, a typical 10-year bond, and interest rates went up 2%, that bond would fall by 15%, the value of that bond. If you had a duration of 14.5, which is like a 30-year investment grade bond, it would fall by 26%. So you can see that interest rates rises can affect bonds in different portfolios. And in fact, a lot of times folks we'll meet with folks and they'll have a portfolio. We'll do what's called a Morningstar analysis. We'll feed it into a software program by a company called Morningstar. And one of the things they'll tell us is the bond duration, the average duration of the bonds in the portfolio. So you can get a feel for that. We've also done some things like in some of the investment strategies we use. A couple of years ago, when we realized that interest rates were going to go up, we built a second set of strategies with shorter term bonds, so we could insulate ourselves some more from all of this. So so that's a little bit on bonds. It's just something that's people don't. It's a little not talked about a lot. Hard to kind of. Oh, it's hard to understand if you explain it right, but at least now you know why. And again, we're always looking. We're moving out of strategies with long-term bonds now, because the Fed has said, oh, they may raise interest rates in a year or two, and or next year, or things like that. So we're looking at strategies like that. So that's a little bit on bonds. That's what okay. Go back to the other camera. Okay. Do we have any comments? Does anybody know what that stuff is?
It does not seem like anybody has the scoop on the Panucci fudge.
Okay.
Nobody knows what it is.
Nobody knows,
Including us.
including us,
Nobody is apparently from New England that's watching. So, hey, we're not alone.
or at least fudge aficionados from New England.
Yeah. So, I want to mention once more, again, remember, if you came in late, we are teaching retirement classes, retirement workshops at UNCW. One this Saturday goes from 9 to 1. One next Tuesday evening from 6 to 9:30. Going to cover investments and income planning, investment planning, tax planning, wills and trust, and healthcare. And it's a condensed version of the even longer class. So it's a good way to get even. I'm either going to talk faster or just cut out some of talk about only the most essential, or both. So this is a good chance to come. Summer, it's hot anyway, so it's a good chance to come learn. So come, Amy will post some stuff in there. You can give us a call. We'll get you into that class. If you've taken the classes, you know that most people would say, hey, they're pretty good. This is a good, tell your friends to come and get in on this class. So, okay.
So Al asked, don't companies that put out long-term bonds call them if the interest rates go down?
No, well, they call some bonds, some companies, and it's complicated, but some companies, when they put out a bond, they say in X years, we have the option to basically pay you off early if in fact interest rates have dropped, and we can now take that money that we pay you, we can go and get money again at a lower rate. Not all do, treasuries, the government, they don't call their 10-year treasuries if things get lower. So it happens with certain private or corporate bonds, but not with all. Mm-hmm. And even then there's certain restrictions, and then it has to fall enough to be worth the company going through all the paperwork to reissue the bonds and things like that. We haven't seen too much of it lately because interest rates have been bouncing on the bottom for so long.
Yeah. Oh, so Dad, I moved my plant over here. I know we're like at the end of our time, but we have like a minute. And I moved my flowering plant over because you were all excited about it. Can I show my plant?
Yes, you can. This is pretty cool. You got to see her flowering plant.
I came out here and I mean, granted, now I'm like very hot sitting on my porch out here, but I came out and was like moving my camera around, and I realized that my Hoya has not one, but two blooms right now. And so I just thought it was really cool and that I would show you. So I have two beautiful blooms on my Hoya. Ignore my tag of my pot. I haven't taken that off, but
What's a happy half hour webcast for, if not to show off your potted plants, you know?
It is loving. It's everything on my back porch. I have for anybody who is a plant lover, my back porch is south facing and it's covered. So all of my plants back here just like thrive. It's like you put anything back here and it just goes crazy. So everything's very happy back here.
Oh, good fun.
We do have some people chiming in. I sent them over to you guys on this Panucci fudge. I don't know if you want to talk about them over there.
Oh yeah. Oh yeah. The dominant ingredient is brown sugar. Okay.
And they seem to have it on Michigan's Mackinac Island, so says Paul.
Mhm.
And Phil has a recipe from his grandmother.
You like it better than chocolate fudge? You know, I don't know that I've had a Panucci fudge to compare. I wonder if they have it down at Kilwins. If you've been down Kilwins downtown on Market Street between Water and Front has a whole selection of homemade fudge. I don't know where else in town you could get, a selection of it. If I had to, I don't know if I have a favorite fudge. I think I just prefer fudge that doesn't have chunks of things because I like my fudge to just like melt in your mouth and disappear. I don't know.
We also may want to say, well, I don't know where we left off, but it looks like Kathleen, Ricky, James has joined us. Paul has joined us. As we mentioned, Charlene, Phil, and Lynn. So always like to say hi to our fans. So, okay. Well, we are bumping up against the half hour. Time for the best part.
Mm-hmm.
This is where we do a wine drawing. To get in the drawing, you basically can reply to the message we send out. You can invite people. If you invite people and let us know you have, we'll put your name in twice. How else?
You can actually on Facebook. One of the easiest ways is to RSVP on Facebook, and then an extra easy way is on Facebook. You can click invite friend, like you just hit like share and invite your friends, and then we can see that. And then you get, for every friend that you share and invite is an extra entry. So I mean, that's super easy.
Yeah, it's a great way to get to entertain your friends and get them introduced to us. By the way, if you are out there and not a client and you'd like to talk about something in your world, Amy will put it in there, but you can go to the website Carolina 15 and book a 15-minute phone call with us, talk about whatever you like. It's just a way to get some questions answered. You may have questions on bonds or anything in your plan. Best thing is to come to the class, but if you can't come to the class, you got a quick question, carolina15.com. That will take you right to an online calendar where you can book a call. So that too.
All right, can I draw the wine?
Yes.
All right. So our winner today of 2 bottles of wine shipped directly to your door from Fermental Bottle Shop. They're located in Ogden, a really cool family-owned bottle shop. Just one. Our winners are Carol and Phil R. And I think I saw them. Oh, I see them right here. So Carol and Phil, you are our winners. And actually, I got to see them in person the other week. So I'm very happy that you guys are our wine winners this week. So
congratulations. Congratulations. And as again, we will see you next Thursday at 4:30 for another happy half hour. So cheers, everybody. I've already drank all mine here.
I haven't finished mine. I'm slow.
Bye-bye. See you next week.
See you next week.